Yo, wake up at dawn, got my screen on blast. Candlesticks popping, charting the cash. Personal funds in the game, no cap, no lie. Risk it all, but my play stays sharp, multiply. S&P whispers, NASDAQ replies. Buy the dip, then I watch it rise. Bear, try to bite, but I flip the script. Bull market flex, got my grip on it.
Hello everyone, this is Kiprotich from Pip Session. I want to welcome you guys to my YouTube channel. I'd love that you like, you subscribe and you share it with your friends, and so that they shall also get to know all about trading and they shall also acquire the knowledge that you are also seeking. Today we are going to talk about gold. We are going to do the market recap on what gold has been doing for the whole week, and we are going to learn a lot of things. This will be a deep one. We are going to talk about various things, and it's been a moment since we had this conversation, and I want to thank my students, Prosolo FX and others. You guys have been of help to me. I hope my knowledge has been beneficial to you guys. Today we don't want to waste a lot of time. We are going to jump right into what gold was doing right from Monday to today is a Friday. We are going to do our analysis mostly from 1 hour, then we scale down to the lower time frame. First of all, we are going to talk about liquidity. As we know that from the previous video that we had, we know that price is normally gyrating from one point of liquidity to the next point of liquidity. So we can be having ranges of liquidity. We can pick, for an instance, this one is liquidity, and here we also have liquidity. There are many points of liquidity, so price is gyrating from one point of liquidity to the next point of liquidity. We want to also talk about support and resistance and a few things on trend lines. So let's start with the trend lines. So if you are this kind of a trader who trades with the trend line, I've seen some of my students have been trying out the trend line thing and it's been working. When we consider the trend lines, we saw that gold was moving in an uptrend from Wednesday last week, creating higher highs, higher lows, respecting the trend line. Then boom, it broken below the trend line. So after the break of the trend line, we are expecting a few things. First of all is the retest of the trend line. So breakout and retest. So we saw price moved after breaking, came, then it tested the trend line, then we had change of character here, then retest, then we had another breakout. So when you are considering trend lines, this one would have been your trade. You could have entered here, then here all this is trend line liquidity. So you could enter here, then you hold your positions all the way down here. I'd recommend that you float your positions here, because at some point price can gyrate from here back to here first before coming and hitting your major point of interest. So we could be seeing that price has been in a bullish move, breakout of the trend line, then a retest. When we consider lower time frame here, I'd recommend we come to a trade that we had yesterday with my community. So we had this kind of thing where price was moving in this channel. I know most of my students love trend line because it has been working currently in gold. I know for a matter of fact, trend line is one of the oldest way that people has been trading, and it's been proven to be successful. So we saw price was moving in a channel, then it broke, then here boom, broke below the trend line. We tested the trend line, then we had another down push or the downward move. If you walk in here, we can go back to the 30 minutes time frame, then we consider what price initially was doing. So this one was the high, so price created resistance, came, retested, then boom, break out of the resistance zone. So this one was supposed to be the resistance, became support, then support, and hold the price to move higher for around 750 pips. That was a crazy move. This one was now support became or resistance became support and supported the price. So if you were holding in this trend line, you could have offloaded your position right here, right here, right here, where resistance was becoming support. Then that was the first case in the trend line kind of trading. So today also, my students had a few trades here and there following this trend line. So I had my students telling me they saw this move, yeah, here, and boom, when price broke below this, my students told me that they were sure that price was now going to move downwards. It was a nice one. So they saw this bearish flag, and when I was waking up, they were in sales positions when price break out on this trend line, because they knew if price cannot break above these highs at that moment in that session, so they were expecting more lows. And I was also expecting price to come and fill this imbalance. This was the fair value gap, so I was expecting price to come and fill at least this imbalance. Then we have buy trades that will be targeting this region. This one was my point of liquidity, so I never had these sales or anything, but I had these buys because when I was waking up, my students had already been in this trade, and for me, the risk to reward ratio was not impressive. With the right knowledge, with the correct ways to analyze the markets, I'm very sure that most of you will be profitable just trading trend lines, but your trend lines must be in sync with the higher time frame. I know teach a lot on trend lines, but I want to talk about also support and resistance. So, but it shall be just a market recap where we shall be talking just a little bit, and maybe only for the record, we shall be just talking a few things on support and resistance. So we know when price is moving in an uptrend, we can find some regions where price will be consolidating for like this for a very long time. Then we can see boom, a break above, then price can return, boom, break below, retest here, then sell off. So to the normal trader, we see this region as resistance, and at the same time we also see this region as support. So price can be gyrating from resistance to support, then sweep a few liquidity here and there, then come sweep again here, cause a fake out, then sell. So it depends with what the market wants to do at that time. But support is a region where price comes and bounce off, buys, then bounce off again, buys from the same region. Whereas resistance is a region where when price touches the region, it sells off. touches again the regions, then it sells off. So that is what we call resistance. So we know gold mostly respects the higher time frame. Mostly, if you are a good trader, you will know that after gold break out of the resistance, it comes and changes the resistance to become support mostly. So if you are a support and resistance kind of trader, you cannot miss trades in gold. And I want to tell you and assure you that when you are marking your support and resistance zone, kindly don't use lines like this. Use regions. It will solve most of your problems, and it will help you uh, get rid of being stopped out of the markets. So if this is your region of support, because here we had price came, so we can extend this, so we've seen price came here, created resistance, 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 then broken out of the resistance. So we are expecting retest, then move higher. Wait and look for confirmations. So confirmation can mainly be found in 5 minutes. I don't recommend you trade 1 minute if you are still a beginner. I'd recommend that you use 5 minutes time frame or confirmations for you to enter a buy trade. So that is one instance of support, of resistance becomes support. Here we had another one here, then the retest. We had this one, retest again of the same support. Here again we had this region. You see, this one was an older region of resistance. So resistance, price broke out of the resistance, then came again and respected the same region of resistance. That's why if price is in a consolidation like this and price break out of the resistance, you don't have to say price broke out of the resistance. Now I have to wait here, then I buy. It doesn't work like that. Price failed. So you have to have the reason why you want to buy at that particular support. At the same time, you have to have a reason why you are selling at the same region of resistance. So, and those reasons, the reasons are mainly found in the higher time frame, because your low time frame trades must be in sync with the higher time frame trades. So we see price came, respected, then boom, sell off. Yeah, so that is what we call support and resistance. For this video, I don't want to make it a very long and tiresome video. I want to talk about liquidity. I think I'm a liquidity type of trader. I'll be starting here and I'll be analyzing this in a strong way. So we had price breaking these highs. Then after price broke that high, we had this is the low that caused the break. Here is another low. So this one is liquidity. So we are expecting price to take out this. Then we have buys. So we had this liquidity here. Our liquidity is money. So money here was taken out. Then price moved. Here we had a break, then there was a retest, and price failed to sweep out this liquidity. We had another gyration of the price, another move. During the Donald Trump speech, we had price sweeping out all this liquidity, here, you see, because when you consider here, price failed to sweep liquidity. Also, price failed to sweep liquidity, but it swept the internal liquidity when you consider the lower time frame. So price swept the internal liquidity, but we have the external range liquidity here. We also have this one because this is the low that gave the high and it has not been swept. So when price came and swept this, we had these massive buys. So after these buys, we had this move to the downside. So we want to talk about a few things. Here we had price getting break of structure. But when price now started sweeping this liquidity, then we came here, another liquidity. Then we came here, we had a major break. So this one now becomes the turtle soup. So this one will be now changing to turtle soup. Then we had price moving all the way. Then we had here change of character. So we know after this change of character, price has now shifted from bullish momentum to a bearish momentum. It can be shorter, but normally it gives out reasonable pips. You can get up to 1,000 or 200 or 1,500 pips or 800 pips. It depends with the market condition at that time. So we had price breaking this major. So we had change of character, calling this George. Yes. So after this George, what are we expecting? We are expecting price to sweep liquidity. Then after the sweep of liquidity, will be having more sales. Now that price has confirmed that it wants to sell, because there was this, there was also this, there was this, there was this, there was this. But when we consider this time frame, we had a breakout, then price was retesting resistance. So resistance was becoming support here. But as price was moving from resistance become support, we have to be careful. First of all, if there is an imbalance here, price must respect the imbalance. So we had sell off, then here bounce to the upside. So we have point of liquidity here. After the bounce of here, we had a little buys here. This one was a risky trade. Only trade this if you know what you are doing. So we had let me show you in the lower time frame. So we entered this trade after consolidation before the sweep of liquidity. So if you are a good trader, you know that this one is one of the high probability trades, because at this point price normally tend to move in a speedy way. Our entry was here, and we were hoping that price will come and sweep this liquidity before moving downwards. So in the 30 minutes time frame, we had price, bear with me guys, we had price coming and sweeping this liquidity. Then we had this move to the downside. We had this first break. I'll consider this my break. I don't normally love this kind. I love something clean like this. So this one was the first break. This is the low that caused this break. So this is my internal liquidity. So I'm expecting price to come and sweep this liquidity, then it move. So if this is the low that gives the high, so all these are internal liquidity, and I'm expecting price to come and sweep all this internal liquidity before the major move. But initially we had this fair value gap, and with my mentorship students yesterday, we were waiting for our setup here. We were watching here when we saw the bounce off. We had break above here, so we were expecting price to come and clear this imbalance, then move. So we missed that move because price was moving. The market maker was filling in more orders, and price could not wait to come and rebalance. We are not going to say we are holding our trades up to here, because this one was the point that swept this liquidity. So when we are entering our trades here at this point of interest, we are considering liquidity at that time, of which our point of liquidity was here. So our move was from this fair value gap up to here. So we had this impulsive move. So when I saw price tapped here, tapped again, sweeping this liquidity, and there was rejection and prices closed above here. So when I saw price printing with the momentum, then created a wick, we entered here and price moved all the way, hit our TP. So that was price moving from one liquidity point to another. So after price swept this internal liquidity, we had no business being in the market. You cannot say, let me hold up to this. This is our point of liquidity, and trading up to here is just enough. So if price has delivered to you 260 pips, then well, that is okay for you. So we had price moving, tapping this liquidity. Then we had this region. You see, price never closed with the bodies above this wick. So when it reached here, there was rejection, and we see whatever hammer, we saw the hammer, then price held off. So if you are a good trader, you could wait until the price showed willingness to sell. So this one was the first break. So maybe you never got your entry here, this fair value gap. So price again delivered, break again inside this fair value gap was another entry. Then price delivered, caused a major break, retested this order block. So this was the regions where you were supposed to fill in your orders. Then after this, you are not supposed to be filling your orders here because you will now be chasing price. So you'll have to be filling in your orders here, here, here. And if all this region was not clear, this was the last region you should be placing your trades, and you let price deliver. You could have entered here, just in this order block, stop loss above this order block, or you could have entered here, after the break and retest. We had this one break and retest, so we could have entered here, stop loss above here, then you wait for price to deliver to where? Down here, because the order flow of the market had shifted from bullish to bearish. So you could uphold all these sales. You could learn a thing here and there in YouTube. This is the mentorship videos we've been having throughout the week. We've been watching price movements from the start to the finish of the day, of the sessions and everything. So for a newbie, I recommend that you stay in the charts, get logged in, and you find someone or a community of people you can talk trading with, so that your journey will not be lonely. So that is it, guys. So I want to thank you, and please like, subscribe and share this YouTube channel to your friends, so that you shall be having a good time with us. So that is it, guys. I want to thank you, and until next time, be safe.
Crypto at its peak, trading personal funds, no trust, no loans. We'll be rich forever, stacking what we own. Diamond hands, no paper, we don't fold. Fortune in the digits, glitching all the gold. I am winning, yeah, the vibes forever. We'll be rich forever. Smart moves, hella clever. Robin Hood glitching, but my balance don't lag. From penny stocks to eat, I'm a bag to flag. Day trade the rage, swing trade the calm. Algorithm grind, got the code in my